What's up traders? In this video I'm going to be breaking down exactly how I managed to pass my 200k Ftmo account in just 5 trading days and also secure a $8,500 profit split. I'll walk you through every single trade I took, my risk management, my thought process behind every trade, and all the tips and tricks that helped me pass this challenge. So let's go ahead and jump into today's video. Alright guys, so now obviously we're on TradeZella, and here you can obviously see that I've got my Ftmo phase 1 account connected. And you can see the P&L of just over $20,000 here, which is obviously the profit target is 20,000. So you can see all my stats here. So I've got a trade win percent, profit factor, day win percent, average win to loss per trade. This is a little bit ridiculous, but that's because I didn't take any losses. So actually, no, I did take one loss on this phase 1 on Friday the 31st of January, which we'll go through. But this day, so Thursday the 30th, you can see here, this was simply to get my trading days up. So if I just come to this trade, you can see that essentially I entered and exited on the chart here at the same spot. And you can see that my exit is literally just 30 seconds later. So yeah, that one was just to get the trading days, so there's not really much on that. Back to the dashboard, we'll go through the winning trades on this challenge, and then we'll come into this losing trade after. So obviously the day where I passed and I took all the trades was Tuesday the 4th of Feb. So if I just click into there, you can see I took 3 trades on this day to obviously amount to that 20,000 profit target. So yeah, let's click into this and we'll go through the first one together. So gold here. So the first trade I took was on gold. I made just over 3.25%, like 3.3%. This was my chart. You can see my entry and exit. And I've journaled this, given myself a rating and sort of put why I entered, why I exited, and you know, my lessons that I've learned. Obviously added my tags here as well. But what I'm going to do is jump on to TradingView and we'll actually just replay this trade together and go through it. Okay. So I'm getting onto the charts around here. Okay. So let's delete my markup here. So this is what I noticed. Okay. So I'm on this now. Initially, sort of one of my go-to setups is some sort of demand or order block, whatever you want to call it, and then with some sort of liquidity just before to take out. So this would be my liquidity here. So that's my liquidity and that's my order block to take out. Now price actually ran straight through my order block, where normally I'd look for an entry to reject off here, but at this point this is 6:30 in the morning. I'm not even on the charts yet, so I don't even see any of this. However, when I do come onto the charts, I think I got onto the charts around sort of 10 a.m. today on this day. I noticed that we had quite a good push up and sort of rejection from this area. I jumped onto the 1 hour. On the 1 hour, I noticed from this area, you know, this fair value gaps here has been mitigated. We've got sort of this liquidity build up here, this low resistance liquidity build up. And then we've also got all-time highs here, which I would look to target for the day. Just because solid target, you know, with this bullish, we've come down, we've tapped into this, we've taken out this liquidity here, and we've got this sort of low resistance liquidity build up. So that's what I want to look to take out there. So I've looked onto this and my bias is still bullish. So I've scrolling down the time frame. So I'm thinking, now I see this 15-minute demand zone or order block, again, whatever you want to call it here. And I'm thinking, okay, look for entries here. Now I can see here on the 5-minute that we've had this clean market structure shift here. So if I just add this to market structure shift, time frame, I'm just going to get rid of this big demand zone because it's not really relevant. This would have been my ideal entry. So obviously we had this market structure shift, we left all this displacement, we had all this imbalance. My ideal entry would have been off this demand / order block here, right? And I would have had my entry there, my stop loss below there, and then I would have been targeting TP1 here, TP2 all-time highs are there, right? But obviously I've missed that because that was at sort of 9 a.m. I'm not on the charts. So I'm thinking, okay, I still want to get into this. How can I get into this? So my thought process is that, well, I mean, this is kind of the next demand area, right? We're in this area. I've just jumped on the charts. Risky, there's no imbalance before the demand. What I mean by imbalance is sort of a fair value gap before a demand area or order block. It makes it a lot more higher probability rather than entering something that's not really got any imbalance before it, like here. So I'm looking at this and I'm a bit like, I'm not 100% set on that. So I scroll onto the 1 minute and I see what I've got. Now I notice removing that. So I've got a few sort of wicks that I would like to see go and look to possibly reverse from. So I can see this one here. I would like to see go and get taken out before and move up. So I'm looking at that one. I've got these equal lows here as well. And I'm thinking, okay, that's probably going to get run before we go. And then finally, I've got this last wick here. All right. So what I tend to often do when I'm looking at my entries to refine them, on the 1 minute time frame, I jump down and I look at if my bias is bullish. I've gone on to the higher time frame. I've decided my bias is bullish for today. I'm looking for a trade, obviously, that's bullish, right? So on the lower time frames, what I'll do is I'll come down and I'll really sort of refine sort of liquidity points or sort of wicks that I know that has some sort of order sat below that I can use as almost a slingshot to the upside. So what I do is I essentially wait for this one of these to go and I look for a reaction, right? So if we just fast forward here, so the first one goes, close straight through it. Let's see if we get some sort of reaction. We don't get a reaction from that. We take the second one. Now, at the time, I was thinking, okay, these equal lows. We've got this sort of demand zone here. Like this is, we're probably going to go from here. But obviously, again, I'm going to wait for confirmation. So that happens, we don't get that. So now I'm here. Okay, and I'm thinking, all right. So this is kind of the last sort of point. My next one potentially would be here. These two are now invalidated, so we don't need to worry about those. So let's wait and see if we get rejection from this one. Again, it's not really looking like much, but we do start to build up. We inverse this fair value gap, doesn't really mean much at the moment though. So we start building up. Now, a tendency that I know that gold has on the low time frame is to build up sort of a trend line like this, take it out, and then sort of make the move up, right? And just to show you that's something that I am sort of tracking, if I come into for this trade here that I took earlier on in the year, I started noticing. So other observations I put in my journal here, trend line liquidity. I noticed a recurring pattern where trend line liquidity is taken but not fully cleared before price reverses. And this has been something I've been tracking on gold for a while now. I've started to notice. And I've started tracking inside TradeZella, and I've realized that it is quite an effective thing that I've noticed. So I'm sort of looking for this to get taken out, but not completely, and then sort of reverse. So that's what I'm looking for, this sort of pattern after taking this liquidity. So if this gets taken out, I'll be looking to go long. Also actually inverse this fair value gap. So now I'm starting to really think, okay, all right, this could go long, but I still want to see the partial bit of this trend line liquidity taken out, or, at least sort of us retrace into area fib zones. So, and obviously these wicks here, these are quite strong wicks. So I'd like to see those get ran before I get long, is what I'm thinking in my head right now. I obviously wait, price comes down, takes those out of those wicks. And now I'm thinking, right, okay, this looks good for an entry now. All this liquidity that I want to see. If this candle closes bullish, that's it. I'm getting it long. This is my thought process right now. So that candle closes bullish. Simply I enter around here. I put my stop loss below this low. And then just to play it safe, I end up targeting this high, but on the day, I really regret that. And I should have just targeted all-time highs up here. Ended up getting just over a 1 to 6 when I could have got like a 1 to 14 and just passed in one trade if I held it, but nonetheless. So this is my entry. So I enter, price starts running away, create this fair value gap here. I'm like, yes, it's going to rock it. We do start moving away. We come all the way back. Luckily, it doesn't take me out. We chop around for a while. A lot of chopping around, but we do get there in the end. So that was trade one. So we made just over sort of 3.3% on that one. And if I just show you this on TradeZella as well. So if I just go back to the trade, just select the one account that I want to see. And I just come back to this trade. See here my long position. Obviously, as I said, there was my entry, there was my exit. And if I even just go onto the 1 minute chart and TradeZella and just go back to this actual trade here, you can see my entry was there, as I said, on TradingView. So just after that 1 minute candle sort of closed. And then obviously I ended up getting out just above this high here. At this moment, I was obviously debating holding for all-time highs, which in hindsight I should have, but closed out happy there. And now I'm thinking, okay, I've got a 3.3% buffer that I can use for the rest of the day to try get this challenge passed as fast as possible. So trade one was obviously the gold trade. Now the next trade that made me just over 5% was this US 100 trade. So let me just go into this trade. For those of you that don't know, this is pretty much NQ, but Forex side, because you can't trade NQ on Forex, as it's a futures contract. So if I just go into US 100 here, or NAS 100, all the same sort of things, whatever you want to call it. And so now we pull up the chart here, we see my entries and exit. Now you can see on this trade here that I had quite a lot of entries. I was quite confident in this trade, so that's kind of why I went in quite heavy on this trade, and obviously I had my 3% buffer to sort of work with. So let's jump on the trading view and just go through this. Now this is the trade markups that I had. So what I'm going to do is break this down for you now. So if we just replay back to before this trade actually happened, so about here, let's say we're looking at the chart here. Now my bias is bullish, right? At a minimum, I want to see this fair value gap get hit. Reason for that is looking on this time frame, we had all this displacement here. We're kind of uptrending after filling in this gap here. We had this big imbalance here that we tapped into, and we wicked quite heavy away from that. And then also we took out this liquidity here, and then we come up, we keep making this low here, and then we come up again. So now I'm kind of looking for this sort of movement to correct and then continue to the upside. So that's how I got my bias for this trade. Now looking at this, I'm on the 15-minute. All right, it's kind of always the time frame I use to sort of, get it's kind of my golden time frame. But I'm looking at this sort of area of demand here, and I'm thinking, okay, great. Similar setup to last time, right? I've got this liquidity here. So I want to look for this to get taken out and then tap into this demand zone and then move up. Now, as I said before, I always want to look to scale in. So inside this demand zone, I can see that there's an imbalance. So more often than not, this imbalance is going to get filled. So there's no point entering straight off the top here. We want to enter from this imbalance, and there's also a 5-minute sort of demand zone or order block here as well. This is my new sort of area to look at. So what I'm essentially looking for is price to come down, take this out, tap there, maybe go up from there, but ideally tap into here and then move to the upside. So obviously we play price through a little bit, sorry. We take out that first wick. I'm sort of getting a bit antsy, but it hasn't touched my demand zone. So I wait for it, taps there, taps into my demand zone. All right. Now I'm coming into the 1 minute time frame. I'm sort of just checking what's going on here. Now, what I noticed, right, as I said before, right, I always want to look on the lower time frame and refine sort of my entry even further. So as I said, I've got that 5-minute demand zone there, which is likely to get tapped. But I noticed before that, I've got this very obvious wick here, right? Now, more often than not, it's going to get tapped. And I'll be completely honest, I did enter here as well. So I've added a few positions here, lower size, just because I don't want to miss out on this position. So if I just go back to TradeZella, right, you can see that I'm entering all of here, regardless of what happens. And I'm sort of, you can see I got stopped out a couple of times. I've got these super tight stops. But yeah, you can see that I'm entering there and I'm thinking that it's going to go up. But the other thing that I do notice is this here, and now it's formed this low here. So I'm thinking, okay, there's a good chance price comes down, takes this low, potentially taps into this order block, and then goes up from there, right? So what I'm extremely confident that this trade is going to go up. So I'm literally just entering as it takes out these lows. So comes down, taps into this 5-minute order block perfectly, takes out these lows. I'm buying up here. because I'm extremely confident in my bias. I'm not risking anything crazy because I've got such a tight stop loss. So my sort of entry is like this, right? I've got a really tight stop loss, and then minimum I'm targeting up here. So I've got this sort of low resistance liquidity run here. Once again, so this trend line liquidity built up as well, is just again helping towards my bias because I've got all this to take out. So again, it's looking like a really solid trade, and I can target up there. What was my actual exit on this trade? So my exit was 21465. 21465. Around these highs, I think. Let me just verify. Just before the highs. So about here. Here was my exit. Just below here. And I probably closed because I was happy with the profit there. So I'm looking at sort of like a 1 to 9 there. But the issue is I've been taken out a few times as well before. But we do get in. And obviously 230 opens, right? I personally am not that scared of trading 230 as long as I've got a confident draw in liquidity, and at the 230 open just before, give or take 15 minutes, as long as it's taken liquidity in the favor of my bias, I'm happy to take it. I'm happy to take on that extra risk. And then simply price just absolutely shoots up to targets, and we hit TP on that one. So that's trade 2, right? So we had this 15-minute order block. Liquidity taken before, low resistance liquidity built up, fair value gap to target, these highs to target, but overall high time frame bias. So around the 230 open, so we've got that extra volume to come in, and we've scaled in, and we found this wick here with some imbalance and order block below to obviously take an entry from. Did get stopped out a couple of times on some really low time frame entries, but eventually we jumped back in and we got the position towards our take profit. So that's trade 2. So at this point, we are up a total of percent. So 8.5% is what we're up. So then we just at this point in the day, I'm thinking, right, I just need to take one more trade to get this passed. Let's see what we can find. Okay, so now moving on to the next trade is Euro JPY. So this was just a scalp. So this was actually just a scalp to get basically this account passed because I only need 2% more. I think I went for quite an aggressive sort of 1-to-1 scalp on this, and then I think I took a re-entry as well. Yeah, I took a re-entry here. So I entered here and I took a re-entry here, and I closed down here. So if we just go over to trading view and pull up the price action on this, so essentially I got in here, right? This is my entry on this candle, and essentially what I saw here was on the 15-minute time frame, we swept this 15-minute high. We're in this area of imbalance. Ideally, I'd have liked price to come up higher, but again, I was just looking for a quick scalp. Okay, so price broke down below these lows. So below this low, it also took out these lows, right? But it obviously closed quite strong, and it left all of this liquidity here. So again, we've got this buildup of liquidity, this low resistance liquidity again. If you'll notice, all sort of trades that I've taken here have sort of a buildup of liquidity that's quite clear to target. But essentially, price retraced into this 5-minute sort of fair value gap here. Then essentially I entered, and I was looking obviously for shorts down to take out these lows, or to however much it took to get past. So stop loss above there, target would be there. So I had a 1.4 to 1. I probably risked quite high on this, maybe 1.5%, maybe even 2%. And then price came against me, tapped into this area of supply though, right here, and then started to reject. And then we started to make the move down. Then I think at this point EU was waiting to take a high, and I was watching the EU chart quite closely to look for some sort of confirmation on EU, because EU looked bullish at this point and EJ looked bearish. And I think once we sort of came back in here and we got this sort of projection, I think I re-entered around here, and then obviously we got the sell-off that I was looking for to then finally hit TP. And then at that point I didn't care what happened because I was out. So yeah, that was that trade. Yeah, so we got out just below these lows, with just enough profit to obviously Oh, it did actually continue to sell off very hard after that as well. Wow, imagine that hold, Jesus. But yeah, got out just after those lows, and then that took me to pass. But obviously there is one more trade that we're missing, because obviously this adds up to 21,000 and the P now is 20,000, and that's because on the Friday before we took a 0.5% loss. So let's go into that loss. As you can see here, this trade was on GU. So just loading up the GU chart here. This was the setup I looked at. What happened here was actually wanted to sell from here, right? Because we had similar setup as I was looking for. We've got this area of supply, we've got the liquidity before we take that out, and then we start to sell off. So let's go ahead and pull this up on the chart and see what really happened. Okay, so jumping onto TradingView here, you can see this setup, and although this obviously looks valid, and it was, in a sense, if you took it from this area, completely valid. However, I actually got in down here. So if we look at TradeZella, you see that we've entered here, right? Now, the reason for this, of why I've done this, is you can see that we obviously close pretty bearish below here, right? And we leave this big imbalance here. So essentially, I'm looking for some sort of continuation from this area of supply or order block. And I'm essentially looking for this sort of move to happen down here to take out this liquidity, right? And the liquidity that I've got marked down here is this low here, and we've got all this imbalance below it. So I'm thinking, okay, sell off here to continue down. Now, the issue why this trade loses. So if I just play it out, obviously we sell there. Now, first of all, we haven't waited for any lower time frame confirmation, right? We've just sold on 15-minute, sold off that 15-minute area, all right, without waiting for any lower time frame confirmations, which first of all, obviously isn't valid. It's not a part of our strategy. It's not what we do. All right, so we had this low resistance for liquidity and the lower time frame, so that had to be taken out first as well. So it just made no sense to sell from here. Number two, an issue we made with this, right, is if we look at this actual range and the higher time frame, we're actually in a premium selling down here. So why would we then continue to sell off, right? The odds are we're going to pull back into discount and then sell off, which if we play it out, does in fact happen, right? It pulls all the way back to the top of the range, and then news catalyst takes it down lower. So not necessarily the wrong idea about the draw of liquidity, but just too early and no low time frame confirmation. The reason for that is probably because I just got the challenge. I wanted to get the trading days up, so obviously the minimum trading days is 4. I was just looking to take a trade on a low risk, so I took this on a 0.5 risk, assuming that it would just run down to here because we had this big imbalance. We had this sort of area of supply, and I was quite confident that it would continue to run down. However, you know, I've looked at a few things, should have waited for my entry confirmation, but I didn't. So yeah, the issue with that loss there. Then the other trades on phase 1, if we just come back to the dashboard, we can see that the other trades were all just to get the trading days up. So here, this was instantly opened and closed at break even pretty much. Then we had that 0.5% loss and then closed at entry pretty much just to get the trading days up. And then we had this one day where we managed to pass everything and make up for that 0.5% loss. Let's move on to phase 2. So let's move on to phase 2. Go ahead and swap our account to phase 2 here. Now, as you can see, we had this one losing day here of a 0.25 risk% trade here on GJ. So let's click into that really quick and have a look. So as you can see here, all right, super silly loss, to be honest, looking back. But essentially what we were looking for is we saw this higher time frame area of demand here on the left here, and we saw that price just about tapped into it, and then we were looking for continuations to the upside, basically reach up to this demand here, or supply, sorry. So we entered here off this sort of fair value up and area of demand. We had this low resistance liquidity down here, so essentially we were just on the wrong side of the market. So price, of course, it did push up from our entry, so it pushed up to these highs. All right, we should have gone break even here really, but yeah, and then obviously price from there completely sold off all the way down and has continued down ever since. So silly loss there. Should have gone break even here to minimize it. I think obviously we did only lose 0.26, so we did obviously minimize our loss a little bit, so it was quite good from ourselves to obviously manage that. But yeah, we should have gone break even, and we also had the wrong bias, but it happens, and at least we minimized the loss. So positives there to be taken away. The next obviously trade that we took, which was to obviously pass the challenge, was this trade on US 100. So we can see on this US 100, NAS 100, NQ, whatever you want to call it. And we can see our entry time here was at 12:36 pretty much. So, and we can also see our entry and exit here on the chart. And we were quite obviously targeting these highs here, which is where we got out. We got out just above. I believe that was just because we needed slightly more to pass the challenge. So let's go ahead and see where we took this on the chart. So this is obviously the chart and the price action for where this trade happened. We've marked out these highs as our target, and we also took out this low resistance liquidity here. Then we came back into this imbalance down here. Ideally, I would have liked to have seen price come down all the way down to here and tap into this area. However, we didn't quite do that. But the reason I was confident that this trade was ready to reverse was this candle here, right? Instead of closing below it, the body of the candle actually rejected, and it also took out the low of this candle before rejecting, and the body closing above the previous body of that candle. So that indicates to me that we're at least at a minimum going to come out and take this candle's high. Okay, now looking on the lower time frame. So if we look into where we actually got our entry, so now my bias is bullish and I'm looking for longs. Okay, so looking at this, where's, as I say, on the lower time frame, the next place for price to slingshot to take me higher. Now the areas that I see is this low here, especially because we've got this order block here. So I'd like to see price come into there, tap that, and then go up. Or obviously we've got this low here, which is also valid. But as I say, we want to wait for confirmation. So let's see what happens. So our entry was 12:36, remember? So we come down, right? At 12:35, we take that low, we tap into this order block, and we make a nice rejection candle here. And what happens again is we take out the low of this previous candle, and the body actually closes above. That's our buy signal. And then this candle is 12:36, so we actually enter the open of this candle, we put our stop loss below area here, and then obviously these all the way at the targets. Okay, so that's the reason for entry on this. And then we obviously play it out to the higher time frame, start playing it out. Now as market open happens, I'm sat in here, right, live emotions, I'm waiting, I'm seeing a lot of chop here. As market open starts to occur, right, okay, market open 230, I need some sort of liquidity to take me higher. I mark out this low, this area of demand here, and I'm extremely confident that this trade is going to take out this low and then move to take out the highs. So watch price, it does exactly as expected and runs up to TP. It's the final trade we used to pass phase 2 in one trade. Those are all the trades that we took. You can see entry, right, all the way back onto the 1 minute as well. You'll see my entry on that exact candle. So back here, as you can see, right, price here, rejects, getting on the open of this candle, stop loss just below there, target those highs. Just 0.5% on that. I got 0.5% on that, and I got basically a 1 to 10R, which obviously then passed me that account. And the rest of the days, all I had to do was place a trade, get break even, close the trade, and that was me done, and that was me passed. So yeah, that's how I passed phase 1 and phase 2 in a total of 5 trading days actually. And then also, just for full transparency, here's the verification certificate from Ftmo. You can scan the barcode. And then also here is that same account 2 weeks later after passing, due for a profit split today of $8,500. And you can see here it says it's my profit split day. You can see the equity in the balance, and you can see it's just very small trades. Average loss of 207, average profit 571. And there's no losing days here, 1 break even day. So yeah, just for full transparency, I'd show you that also the profit split coming 2 weeks later. So there we have it. That's how I was able to pass a 200K Ftmo account in 5 trading days and also secure an $8,500 profit split. If you guys enjoyed the video and the breakdowns, please feel free to leave a like or a comment down below, and also subscribe to see more videos like this in the future. I'll see you in the next one.